At IB Canada Group, we are your complete and independent source on the infinite banking concept, serving Canadians from coast to coast.
I'm Steve McClellan, the financial engineer, proud member of the IB Canada Group, where we show you how to grow, control, and keep what you build instead of giving away to taxes, fees, and the unknowns. And we got a great show for you here, folks. We got fellow IB Canada member Kathleen Berg. She's going to talk about her experience with the infinite banking concept and what she does for her clients to really get them to that next level. What's one of the major things you're talking with your clients right now or future clients? What's your main focus?
We've really been talking about how to use these infinite banking policies as a stopgap, as a backup plan, as the safety net, because everybody's seen everything running too high, stock market too high, real estate too high, and they're concerned. We've got today Russia-Ukraine tensions, so people are worried, and these infinite banking policies are starting to make a lot more sense, and those that have them are really appreciating them. So that's been a key conversation that I'm having.
And I share those concerns as well. Especially, it just seemed to be snowballing. That's one thing I think COVID has brought to our attention, that maybe the governments and the so-called leaders out there, they do make their decisions, and then even though if they know those decisions aren't true, if they're given facts, they seem to dig in their heels. So the infinite banking concept is one way to really protect your money, regardless of the knee-jerk reactions that our current and future politicians tend to make. Can you tell me a little bit about yourself, why you got into the financial industry in the first place?
Well, when I started my career, actually, I started the corporate world as a mutual fund sales representative, and I saw that it just wasn't doing anything for anybody. I got out of it in what they call the lost decade, where in 2008 people hadn't made a cent. So I became a financial planner myself, but I knew I wanted to be a different type of financial planner. So I really started down the real estate route for the equity and growth component. But I loved the insurance aspect. I didn't love the stock market, the mutual fund aspect. So I loved the idea of buying income properties. So we use our insurance policies to buy income properties, and we showed people how to do that. And that's how it kind of all got started.
That's awesome. That sounds very similar to the route I went into. I went into the financial industry thinking I knew quite a bit about money, and very interested in the mutual funds and the stock picking part side of things. Soon to realize that there's very few people that are in the stock market picking Hall of Fame.
Yep.
And it's very emotional. And you mentioned to me earlier that you also deal with a lot of stockbrokers. So how does the infinite banking concept work with your real estate investors, the actual stock picking type of investor?
The key is that these infinite banking policies are not the or asset, they're the and asset. So I'm never asking clients to choose between investing in an income property or an insurance property policy, or option trading or an insurance policy. It's always the insurance policy and still having access to your capital for whatever wealth strategies that you want to use that makes sense for you at the time that makes sense for you. So for instance, we have purchased 3 investment properties with our whole life policies, my husband and I. We have 2 policies each, so we have 4 policies at this point in time. And I walk the walk, so I've shown people how to do it. And when you look at an illustration and the cash values that accumulate over time, they build an amazing safety net, but again, you're not locked out of your capital. In fact, I want people to borrow against their policies for wealth strategies during their wealth building years. But I also want them to have this amazing safe asset pool in retirement. So that's how we've approached it. And with option traders or stock traders, I think they all realize that there's going to be if they're deriving an income from these portfolios, they fully realize that there's going to be a period in time, possibly a long period in time, in which those investment portfolios are not going to be giving them the income that they need. So without the insurance policies, they're going to be forced to sell when markets are in a terrible situation, and which will result in a major encroachment in capital. And then they're running the risk of running out of money. But if they have this amazing pool of safe assets that are still appreciating and growing, then they can go to those insurance policies and let their stock portfolios rebound.
That's awesome. I really like how you said the and asset. It's not a this or that, it's a and. And
sure.
The fact that it's, like you said, safe, and the fact that it's growing, no matter what the stock market or real estate market or what the governments decide to do, it's there vested. It's pretty powerful stuff. If you were to describe the infinite banking concept, or if you have a definition, how would you describe the infinite banking concept?
I guess because I work with a lot of real estate investors, I'm always explaining it in terms of it's like a property, right? So it's like a property. I can't guarantee that properties will go down over time, but I mean, if you look at expectations of a property in 10 years or 20 years, it's likely going to grow. So this is going to grow on a tax-free basis, much like a principal residence would. But you're also going to have this guaranteed line of credit, which also can only grow. I can't guarantee the rate at which it will grow, but I know that once the line of credit is reached 100,000, it will never drop below 100,000. The illustration might show the next year at 110, it might be only at 105, but it always grows. So, and similarly, the property, as in the policy, the death benefit also always grows. What asset is completely safe and can never lose value, right? And has, let's say, a decent rate of return. And of course, you can't really talk about the rate of return on an insurance policy because we don't know when somebody's going to die. And it's based on that, but based on life expectancy numbers and current dividend yields, these are decent. The expectation is a very decent yield from these policies, but again, completely safe.
I concur with you. I can only think of one, and that is the properly structured dividend paying whole life policy. And It's very important that these are designed properly. With that said, I totally, we're both on board, and hopefully those listening, that this is a very safe, very efficient way to grow your money. Taxes are very detrimental to your really your financial independence. But what do you see from your expertise and your experience? What's one of the number one problem facing your clients today?
Well, if a client loses 50% in an asset, they have to get 100% return just to get back. So the most important thing for me and my clients is to have no loss of money. It's not a perfect situation. I'm not going to say it never happens, but the more we can protect our money to be safe without loss, the safer that they're going to be. So what we're trying to achieve with a properly structured infinite banking policy, using, as you said, whole life policies, is a world in which they can create much greater income from that same asset base. So they don't have to take the same major risks to achieve a greater return for a greater retirement income. The biggest risk I think that they face is running out of money and taking on too much risk.
Yeah, it's funny, when you start off in this industry, there's always the talk of the risk and reward, where this really eliminates that. It's all reward, really.
Yes, and I think people think that the only way to do that is through a GIC, which are earning nothing. So when we can show them that they can have a really a large proportion of their money completely safe structured that will provide for a tax-free access to cash through the cash value, which is like a line of credit, against the policy, they really like it. When you see what it can do in the moving parts, they really love it. They love it.
I agree. And I brought up the term financial independence there earlier. What would be your definition of financial independence? Or some people even say success.
I like to bring it back to the Robert Kiyosaki model, where your income exceeds your expenses. Your passive income exceeds your expenses. And you actually don't have to work. You can work, but you don't have to work. And there's enough buffer in the plan that allows for inflation, that allows for the not only just the increased cost of things, but the things that we're going to buy that we don't even realize we're going to need to buy, like how things will change. I mean, 20 years ago, I didn't pay for internet. I didn't pay for cell phone. I, had a car with crank windows. None of that is around anymore. It's all increased lifestyle, right? So.
And based on that, what stereotypes have you seen throughout your experience in the financial industry?
Stereotypes in what way?
I guess,
well,
both
manners?
people or beliefs that people have.
Okay,
I would almost say myths. Myths is a better word.
We have a lot of discussion around that, actually. I call them financial planning mistakes. I, for one, am not a big proponent of RSPs. I believe that RSPs are a good tax tool and they're a good savings tool, and we should have a savings component, but they are not a wealth creation tool. That they're just this tax bomb in the future, because RSPs, they not only postpone the tax, right? You pay it when you take the money, but they postpone the tax calculation. And I am concerned about the state of governments and the state at which they will have to tax our citizens in the future, because our debt is just, getting our fiscal debt is just getting out of control. So I believe that we will be in a worse fiscal situation in the future. And in which case they will have to tax people higher, in which case the RSP strategy will have been the wrong strategy. We as planners like to tell people that, in RSPs you are great because you'll be in a lower tax bracket. I think that's foolish. I don't want my clients to be in a lower tax bracket. I want them to be wealthy and in a higher tax bracket. But I also want them to structure things properly and to have a major, I'm talking a major portion of their wealth in these policies that grow tax-free and are completely safe. That's what's going to help them in retirement and over time.
Yes, amen. Being an engineer, I've driven down on a lot of these different wealth creation strategies, and I totally agree with you. It's not what you have, it's what you get to keep. And unfortunately, you're bang on with IRSPs. They're better than doing nothing, but there are definitely better options than RSPs, because when you do take them out, you're taxed like a paycheck. And I tend to agree with you. I can't see taxes going down. I can only see them going up, especially with the way things are going here today.
As a traditional financial planner, that's one of the major products that you sell. And they just can't walk away from that.
So how many years have you been in the industry again?
Well, I've probably been in the industry 30 years. But has been a certified financial planner since 2008. So like before that, I was in the corporate world.
Wow. So you've been in it for a long time. Now I'm relatively new. I've got about I think coming up on 6 years here. But even in my short time, I've seen the transition from women not just entering the workforce, but becoming leaders in the workforce. And I would put you in that category, being a leader. Do you see what would you say if there was a difference between a male investor and a female investor? What would you say is the biggest difference, if there is one?
I wouldn't say there is one. I would say that the person tends to be the go-getter, tends to make the financial decisions. And I guess people work with their strengths. I often I hear that there's difference between female advisors and male advisors. That female advisors are often more empathetic, more educational biased, not as transactional, let's say, but I think things are changing. So, but
No, I would tend to agree. I think just from my experience, women seem to be more articulate. You nailed the nail right on the head. More, I guess, more emotional intelligence. And who's kidding who? Money is very, very emotional, and they tend to gravitate to things that work instead of chasing squirrels. They seem to be, more focused on the task at hand.
But I will say, with the infinite banking concept group that you and I belong to, that are certified infinite banking consultants, because it is a more complex approach and a holistic approach, that both the male and female advisors are very educational in nature. We like to talk with people about the nature of money, the nature of risk, the nature of taxes, governments, and it's a broader kind of concept. So I find that the advisors that are more focused on these types of policies are more empathetic and educational in nature, because you really feel it's important for people.
It really is. And talking about the IB Canada group, how did you get started, and why did you join the group?
I've belonged to other groups that were focused on helping clients get cash, permanent cash value, whole life policies. But only the infinite banking group was really focused on borrowing against the policies for wealth strategies. And I myself, like I said, I have been doing this, borrowing against the policies for the last 10 years. And we have bought 3 properties, and we have funded a trading account with our insurance policies. So I was actively doing that and actively promoting it, but other organizations weren't necessarily promoting the idea of borrowing it. That's another myth, is I believe that the governments are using debt and that we need to use debt too. And as we buy appreciating assets and currencies are being devalued, so our debt is being devalued, that's how the wealthy are getting wealthier, and that's how people are saving their retirement and accumulating wealth. So I believe in using good debt.
When used properly, I agree. I think in the wealthy, that's what they've been using to grow their assets. Now that you've been a member with the IB Canada, what's your instant feedback on the group?
I've been very impressed with the mentorship program and case discussion. So when I have cases, I can bring them to people and we cover things. And I've been expanding my knowledge on immediate financing arrangements, which I think will play a role for my clients in the future as well. And how to properly structure a portfolio and things like that.
That's what I love about it too. It's almost like a mastermind, where it's not just you and I coming together and designing these policies. We actually have a group of professional, independent advisors with the same goal in mind, to do what was best for our clients. That's what I love about the group. And then you can have different strategies planned out, so our clients are getting the best of the best.
And there's been some really eye-opening presentations too, like the one that we saw on inflation and how inflation will just like erode people's wealth, like devastating. Like we're always focused on taxes, but to know that actually inflation is much more significant, and even at 2 and 3%, which now we're saying it's like 5-10%. That was an incredible eye opener.
No, it's I remember the inflation index used to be reported to 2 decimal places. Now they just round up, and we know a lot of the numbers that are coming out aren't actual what the actual inflation is. So it's quite scary. But what I like about being part of this group and working with professionals like yourself, we can also seize the opportunities that are coming down the road. We can plan for it properly.
Yeah. And this is why, like I introduced in my practice, that, you want to have assets that are inflation friendly, that can weather the storm.
If your client was to focus on one thing and one thing only, what would that thing be?
I think building up high early cash values, a high pool of safe and inflation friendly pool of money. That would be what I would, and build the foundation of that safety net first.
Build the foundation of the safety net, inflation friendly, tax efficient. Awesome. Listen, this is a question I ask my clients, and I'm going to ask the same question to you. And you got an hour left on the planet. Maybe you're jumping on one of these spaceships and heading to Mars, but you're just on the planet for one more hour. Who are you spending that hour with? What are you doing? And what advice would you pass on? It's a good one, isn't it?
No, I it's funny. Like I think of that all the time. Like what would I tell people? And it would be, I say to my husband, call this person for this, and this advisor for real estate, this advisor for insurance, and this advisor for stock. So I think it's building a good team around you, but open your eyes to these infinite banking policies, because it's the cornerstone of everything. Like there's a saying, if you don't own one of these policies, you either can't afford it or don't understand it. But if we've approached you on it, you can definitely allocate a proportion of your wealth towards it.
Okay, so obviously you love the infinite banking concept because you're spending your last hour on the planet.
I am, because it saves people. It absolutely saves people.
And telling your husband where everything's at. That's fantastic. and so true. Now, before we go, is there any final thoughts or anything you'd like to share that we didn't talk about?
One of the things that I wanted to that I'm trying to get across to people a little bit more is how to use these infinite banking policies in their wealth creation. So I think right now is a very tumultuous time, and I am very concerned about the world right now. I'm concerned about inflation rates. I'm concerned about debt rates. I'm concerned about state of the markets, and I think that this is a very smart time to take some of the wealth that people have accumulated in the stock market or in real estate, and to build that safety net. So we ourselves are looking at of cashing out on certain properties and funding back the money that we've borrowed, so that we will have that safety net to create that retirement income.
Hear, hear. So now is the time to build that safety net, to really ensure that you're protected no matter what is coming down the road. Because we've
had a boom for the last 10 years. It's time. It's time.
And unfortunately, I just the weak leadership I see here worldwide, you have to take control of what you can control, and you can control your own money. You just have to. You have to take that step. And the biggest step I've seen between those that are successful versus those that want to be successful, well, they get the knowledge, but then they put that knowledge into action.
Yes.
So we are here to help you get to that next level, to help you grow, control, and keep what you build instead of giving it away to taxes, fees, and the unknown. You can get more information at our website, the ibcanadagroup.ca. But again, that's just the first start. You got to put that knowledge into action to help you get to the next level. Kathleen, really enjoyed chatting with you. I wish you nothing but the best.
Thank you.
IB Canada Group, your independent authority for information on the infinite banking concept.